So stocks are down now, and I'm not really surprised. The Fed's decision was a bad decision. I know in its mind it thought it was making the right decision, but you really see that these deflationary pressures are taking a very, very strong grip. They're hard to shake loose. We have this year a decent amount of federal spending. I said almost 90 billion over last year, and last year was the biggest increase in federal spending in 5 years. But even with that 90 billion increase, you're only talking about growth of 0.8%. So we're fighting against some very strong economic headwinds, very strong economic drag. And then you have Europe and the ECB continuing this insane policy of not just negative interest rates, which are functionally a tax, but now the asset purchases of high yield bonds, okay, more income removal. And it's like I said, it's not a surprise that we saw stocks peak out last Thursday and start to head down on this announcement of Draghi now embarking on these high yield asset purchases. So we really needed an additional, element to come into play here. It would have been a rate hike by the Fed. I know the market would have looked at that really negative short term, but you are adding additional income via that interest channel. You just need that. You need that right now. A lot of my outlook for this year was based not just on the fiscal flows, which have been very strong, and I follow that like a hawk, and I keep you updated on that. But it was also about a continuation of the rate hike cycle, and we only had one since December, and that kind of, the effect of that has kind of petered out. We saw when that went through, it was the bottom in gold last December. It was the peak or around the peak in the dollar. Stocks started to move higher. But now, and also a lot of commodities bottomed out. We saw a 50% rally in steel prices in the first quarter of this year, all based on those fiscal flows and the rate hike. But now those effects are starting to wane. And this Fed is the most cautious Fed I have ever seen. It's Yellen Fed. I mean, they are just afraid of their own shadow. And so now I'm a little bit, I don't want to say I'm worried. There's a concern. I think we're in a stall mode. These deflationary forces are here. By the way, just on that note, if this is true, and I'm still going to pay very close attention to the spending and the fiscal flows, but the gold rally is not sustainable. And I understand that people run into gold for, most of the time all the wrong reasons. There's no such thing as I'm buying gold because of uncertainty, okay? There has to be a reason, a fundamental reason that drives gold higher. And it's spending. And it is the inflation. But it's not manifesting in a lot of these other material markets. It was definitely there. But a lot of these other markets are starting to waver, and it has me a little bit concerned. So right now, situation is neutral. By the way, if you look at bond markets, not just here in the U.S., but look at Germany. German bonds, 10-year, going negative. I mean, massive deflation over there, massive. And the ECB keeps saying, we're going to do whatever we got to do. Yeah, well, you're making it worse every single time you do what you got to do in your mind. Negative on a 10-year, come on. It's bad. What can I tell you? But, it's not the end. It's just we stalled. We stalled. Let's watch the numbers from here. They're still strong on the spending side, thankfully. So we might still creep just at a slower rate higher. But the Fed decision is disappointing. What can I tell you?